What's going on YouTube? This is your way the BW Trader back again with another valuable video for you. If you're a returning subscriber, welcome back to my YouTube channel. And if you are a new subscriber or you're a new viewer, welcome to my YouTube channel. My name I go by the name of the BW Trader, and I'll be lacing you up with free forex knowledge from analysis, technical analysis, fundamentals, mostly trading Nas100 or indices and currencies, and throwing in a little bit of cryptocurrencies, being your Bitcoin, your XRP, and your Ethereum. So we'll take a look now. On this video, we're going to be taking a look at Nas100 analysis and US30 analysis. And most of the time, before I even go to analyzing my my USA indices, what I like to, or what I prefer doing, is to take a look at our dollar index and see the strength of the dollar, so that we may then make an attempt to correlate it to what we are seeing on Nasdaq and US30. That then gives us our edge over the markets for the oncoming week. So in this video here, I'm going to be analyzing Nasdaq and US30. Hit that like button if you like what we are about to talk about. Consider subscribing if you are a new viewer, and let us get into the video. So we are going to, of course, let me click here, go to our indices there, and then let's start with US30. Let's start with the dollar index rather. Okay, so my first go-to would be to remove what we already have there. And let's start by looking at the dollar index on the weekly chart to try and read what it is that's happening here. So what I usually like doing when I'm preparing myself for the week ahead is to analyze everything from the weekly chart. Sometimes I can go even lower to reach even the monthly chart. So in the weekly chart here, what we can all clearly see is the market. This whole move here is a correction. This whole move is corrective. So because we want to focus on the most recent, we have to keep on evolving until we meet the most recent correction, which is that one. And then the most, because we also have to do pattern identification, and not just pattern identification alone. Remember, pattern separation also. So that touch there, so this actually was the best line because it touches the two most recent highs. So more of an ascending type structure, so I can actually make this touch only that and that is the best line right there. That is the best trend line right there, and this doesn't have to touch that. So we are in more of an ascending type structure on the dollar index. On the weekly chart, we can clearly see that, but we are keeping in mind the fact that this whole move here is corrective. This whole move here is a correction, so we know all in all this is an ascending type correction. So because previously we had more of an impulsive move to the downside. So let me go to the left so that you may see what I'm talking about. This whole move here, part of the impulse correction. Of course, if you separate the patterns, correction again here, but all in all, 80% of this whole move is a correction. So because of the 80-20 rule, we know this whole move is the correction. So the market looks to be using this as the impulse correction, looking for the next impulsive move to the downside, because we know that is natural progression. That is how the market naturally progresses. So now that we have been able to identify the type of phase that we are in on the weekly chart, we know we're in a corrective phase. But we understand that we are not necessarily to trade this week based on the weekly chart. We're going to trade on the 4-hour and the 1 hour, but we know we are anticipating potential sells here for long term. I'm anticipating a potential sell there at the third touch of this whole ascending type structure, which the ascending structure is inside of what? It's inside a bear flag, because this is the overall bigger bear flag that begins from here to go all the way to the left. So I'm going to be quickly running through this pair, because like I said, the main aim is to analyze Nasdaq and US30 for the week ahead. And we all know that I also do not want to make these videos long, so let us go on and look into what's happening currently with this pair here. So what's happening currently is we can all still see on the daily chart that this whole move here is still very much corrective. So it's more of an ascending type structure. Would you say this is the ascending type structure? There, I could say that, but we do look like we are ascending currently there. we have more of an ascending type nature. There is a potential that the ascending type structure has evolved itself to become this, for this to then move a little bit higher before it eventually comes down. Now, I want you to understand something also. Remember on the weekly chart, we said we are interested long term for sales. So, but I have not yet picked whether my bias for the week, whether I'm going to be looking for sales only or bias only. That's an inflection point. As you can see, previously it gave the market a push to the downside, but most recently this is not what is being respected. So the inflection point that is of importance currently is this one. And then we have an inflection point all the way at the top there, because remember, the dollar index on the daily chart is showing us an ascending structure. So we are going to focus only on this ascending structure that we are seeing on the daily chart. So we have already had the first, this is the first phase of touches. This is the second touch. I will be looking for more of a third touch before we take a move to the downside on the dollar index. So it means now currently we are looking for more of a move to the upside before we actually move to the downside. So that means all these other lines that I've drawn are actually not important for me as far as now is concerned. I mean, for example, this line here is irrelevant. I don't have to put it there, because then if I'm going to leave these lines here, they're going to end up confusing me. So I know that what's happening, this line here is of importance. Why is it of importance? Because it's going to be acting as more of a reference point, or a point of reflection for in case the market, let me show you, let's go auto again, because in case the market invalidates this potential double top area and also invalidates the third touch, we know that we may still have an opportunity to turn around at a higher level. Let me remove that. So what I'm talking about is this. We know currently we would be anticipating, firstly, the potential top here for us to go to the downside, or the third touch, which will be the first, second, third touch for us to go to the downside. But there is also still potential for the market to invalidate that. So if the market invalidates this potential double top, also invalidates the potential triple touch, then I would still be looking for sales until it invalidates this area here and shows me potential continuation structures to the upside. So unless the market, as long as the market is still underneath here and still in an ascending structure, I will be interested on taking this to the downside. So what would be my go-to area currently? What would be, what is it that I'll be focusing on? So let's go to the 4 hour. Now we're going to focus only on this ascending structure here to identify the nature of the market, the current nature of the market, and what we are currently, what the market is currently doing. So when I take a proper look at this, we know, like I've already said, we're anticipating potentials. We could potentially do this, sell. This is the first forecast. The market doesn't necessarily have to come all the way back here to give you a double top. Remember that. So if the market here gives us a proper tight bear flag that could last for 6 to 8 hours, then I would be looking to take this to the downside. If the market gives me, because then the market would be showing us this impulse, correction, impulse, correction, impulse, and those corrections are all continuation type corrections. So if the market gives me such a continuation type nature, I know that I would be forecasting a move to the downside, so I would be taking my sales. So that's my first way of entering. But we understand that the market does not also have to do that. My go-to setup would be us correctively moving. If the market correctively moves towards this area for a double top, that would be my go-to setup. That would be what I want the market to do. But remember that there is that will be the probable, but there is the probable and the possible. So we have different possible scenarios that could play out here. The probable would be, like I said, for us to correctively move towards this area and then go to the downside. What I would love is, if we're going to get such a double top type formation, what I would love is if the market invalidates this a little bit, because then I would be sure that what the market makers are trying to do at that juncture is to take people out, mass psychology. So when the market invalidates this previous high, what does it get people who are trading support and resistance based strategies to do? It gets most of them to start looking for buys instead of sells, and we would still be looking for sells. So if the market invalidates this previous high, I'll be waiting for more of like a retest, more like a pullback, because then those who are trading support and resistance strategies will be calling that a break and retest. Then they will be taking buys to the upside, and I would still be looking for sells as long as it gives me a correction. I would take that to the downside, because that is one of the most high probability setups. As long as it invalidates this, it gets people caught on the wrong side of the market, and we are able to capitalize with the 10% that actually consistently profit from the markets. So this is what I'll be looking at. Potentials of getting sales there. So that's the most probable. But another potential setup that we may have is we may be impulsive to break that and then slow momentum and move back to the downside. So how we will move at that third touch there will determine whether I will still take this to downside or not. Because if we reach this area here and the market gives you an ascending inside of an ascending, that is one of the setups that I really like. Then to give us something like this, then immediately gives me an ascending side of an ascending. I know the probability of the setup has changed. So then I'll definitely be looking to take that at the high end of risk, at the high end of a risk entry trade, take that to the downside. That would be my target. Stop loss would be nothing more than 7, 6, right about there. Stop loss would be something like that, depending on the ascending structure, because the ascending structure is what would determine my stop loss. So this is what I'll be looking for. I'm going to be interested a lot more in taking this to the downside than taking it to the upside, as far as this week is concerned. But this is what my approach is to US to the dollar index, right? But I want you to focus now. Let us shift our focus now to what is currently happening. So those are my forecasts, but what is it that is currently happening? Let us go on to pattern separation with the most recent structures to see. So we have this. This was an ascending structure at the top of an ascending structure. So you know this was a beautiful sell opportunity. And then immediately after that, natural progression, of course, we're anticipating this to impulse. 90% probably 90% rule. We are expecting that this move will go to the beginning of the correction. So it went there. Immediately as it reaches that, it begins correcting. So this is corrective. That whole move there is corrective. And then 90. What is our rule then? The next rule that I'm going to show you here is, what do we expect? We expect that if this was impulse correction, the next move has to be impulsive, right? But does this look impulsive or corrective? To me, that looks a lot more like it's a correction. So the market immediately after that, there was no real natural progression. The market went into a corrective nature. So we were corrective there with a descending type structure to the downside. And then because of the descending structure, this whole move to the upside comes as an override, or not an override, rather. It comes as more of an excuse me. It comes as more of an after effect of what has happened here. Whatever has happened here is what leads us to have what's currently happening there. So let us go on in depth to see what it is that I am seeing. So what I'm also seeing is, immediately we impulsed out. This, we anticipated it to be more of an impulsive move, but we got into another correction. This to me looks more corrective than it is impulsive. One could argue that this is the only part that is corrective, but to me, let me go ahead and look at this so that I can show you what I am looking at. I'm looking at this as a potential something like this. It has potential to be this type structure there. It has a potential to be building this type ascending structure. So if you are already in buys, let's say you have managed to enter a buy here, or you entered a buy here for some reason, you should know that there is potential for us to actually find reversals there. So you should already be logged in at break even at this juncture. Or if you are extremely vigorous with if you're somebody who manages aggressively, then you should have logged in some profit. Maybe 1%, 2% of profits should be logged in. So this is what I am looking at currently. We can all clearly see what's happening here. The market is looking more and more like there's a potential move to the downside. This is what I'm looking at. And as long as this here is corrective in this nature, I would be expecting, what I'll be looking for would still be the sells. rather than taking this to the upside, because remember I said there is potential for us to sell without actually coming here first. This would be, as long as, if this here ascending type structure is to hold, as long as we approach this whole top here, because then the market is telling me it wants to use this as the impulse, this is the correction, we are looking for more of an impulsive move. The reason why I would take this at this juncture is because of this. I want you to see something. The most important part here is not to trade this to this area. No, that's not our target. The most important area is this whole move to the downside. That is because that could essentially be the move that gives us a whole move all the way here to all the way down. So that's actually what interests me. This whole space here, because there's an insane amount of pips to be caught. So that's what actually interests me. So I wouldn't be taking this because I'm targeting this or I'm targeting that. I'd be taking this, looking at this as potential areas where the market might show us continuations, or it might show us potential reversals, but I would still be looking to take it to the downside. So I'm interested in taking this for sells. Let me go back to the 4-hour to see further and enlarge a little bit, because I hope this is clear to everybody. So this is what we are currently looking at. Currently we are looking at this. Of course, this is an inflectious area, but it's not as inflectious as this potential double top. But the market can, of course, still use it to go to the downside. I would be looking at it as more of a reflection point, not much of an inflection point, but I'll still be looking at it as an area of reference, so that I can be able to reference that. Not to say, oh, previously we did do this, so then we did that. So I'll still be interested in looking at this more like this. So currently this week I'll be looking at to take this to the downside. This is not to say, I repeat, this is not to say the market is definitely going to sell at this juncture to the downside. That's not how I trade. That's not how you should be trading. You should instead of being reactive to the markets, be proactive. I'm not to say when the market breaks here, I'm going to be taking buys, or when the market halts around this area, I'm going to be taken to the downside. But rather, I want to read price action before it happens, anticipate the potentials, forecast all the potential, the probable and the potential outcomes, and then wait for one of them to play out. Prepare myself before actually executing a trade. I'm already prepared. I already know that if this scenario is the one that plays out, this is how I'm going to capitalize, and if this one plays out, this is how I'm going to be able to capitalize. So what am I looking at here? What I'll be looking for, because you're already in this type ascending structure, I would say this is our first touch, this is our second touch. I'm going to be looking and interested more on the third touch. And what I like again with this type structures is we have already had a move to the downside, right? So if we can get more of an arc type formation there, which would give us more of an ascending instead of an ascending, I would gladly take this to the downside. My anticipations with taking this to the downside would not be this would not be my target. But the moment we reach this area here, I'm at break even, because long term, this is what I'm interested in. I'm actually interested on the bigger play, But this is not to say this will happen now. It's not to say that, and it's not to say I'm going to have one trade that I'm going to hold all the way. If this move is what happens this coming week, and for 2-3 more weeks to go on, 2 or 3 more incoming weeks, what I'm going to be interested in is finding as many scale-in opportunities as possible to maximize the potentials of my trades. I could have 4 or 5 trades here with taking this to the downside still. So this is what I'm going to be looking at. So because what I'm looking for is only sells on the dollar index, now I know that there's potentials for us to actually be looking for the opposite of selling for our structures, for our XXUSD pairs. So your gold, your GBP USD, your AUD USD could be looking a little bit more bullish, because this does not, to me personally, it does not look anything like the dollar index is to buy this coming week. If it does buy, it could be temporary, because again, another potential setup, we could actually just move correctively to the downside, give you more of this for us to put there, do that, pin that, and then go to the downside still. So that's another forecast that you should be looking at. How do I capitalize on such a move? I wait for the market to reach that double top area, wait to see what it does. So for me this week, I wouldn't be interested in taking the dollar index to the upside. I'm going to be looking more and more at taking it to the downside. But before we go on into showing you all of the potential scenarios, let's just move on to the most important pair of the day, which is Nasdaq and US30. Just know that for this week, dollar index for me, I'm interested more on taking this to the downside than taking it to the upside, and I'm interested in taking it as an ascending structure instead of taking it as more of a move to go as more of an impulsive move to the upside. But that is not to say the market cannot invalidate this, it cannot invalidate that. That is not to say that this can still get invalidated and we still pull back to the inside. Structure will not lie to you. As long as this is ascending, the market at a point is going to come and respect that structure. So you have to just wait for the market to give you an indication that it is about to respect the structure and then capitalize on the whole forecasted move. If you are not forecasting this, do not force the trade, because you're supposed to take only trades that you yourself have forecasted. So this is a new series that I want to start on my YouTube channel, where each and every Sunday I'm going to be showing you what I'm looking for the week ahead. Then if I get great responses and reactions from you, I might potentially start doing the midweek market reviews also, to show you what has changed with the pairs that we were looking at on Friday, on Sundays, and then we can see maybe I'll drop those on Wednesday so that you can see what I am now looking at for the week, for the last 2 days of the week, and then we can do that week in, week out. Then you'll be able to catch this potential setups with me. I'm also for the coming 2 weeks, next week probably, I'm also looking at potentially starting a new My Forex Funds challenge series, thinking of buying a 20k challenge this time around, using the proceeds from the 10k challenge. Then we'll see if we can keep on scaling up until we are able to buy 300k. That's what my plan is, to buy a 300k challenge by the end of this year. I should get funded by with about 400k from my Forex funds, and then next year we can start taking FTMO challenges, get 300k funded that side, and then we'll be looking at 600k funded accounts. So that's what I'm thinking of doing. So next week I might start a 20k challenge. You wait for that update there. So currently, let us then move along to our next thing, which is Nas100. So this is Nasdaq. This is what I was looking at previously. So I'm going to just delete everything that's here so that we can analyze everything starting off right. Let's go to the weekly chart. Okay, so on the weekly chart, what I like to do with Nasdaq is I don't do the same thing. Excuse me. I don't do the same thing when I'm analyzing currency pairs or when I'm analyzing synthetic indices. But when you're analyzing Nasdaq and this indices, your Nasdaq, your cryptocurrencies, your Bitcoin, your Ethereum, when you're analyzing your US30, you're analyzing your German 30, you would realize that structure is not the same. I mean, look at this. How are you to identify structure on the weekly chart when all the market does is move to the upside? How are you to analyze that? So you have to then be a little bit more cautious, be a little bit more aware of the instrument that you're analyzing, that it does not move the same as a currency pair. So what are we looking at there? I do see that this whole move here is a descending type structure. So you know, long term, because this is a descending type structure, long term, what are we looking for? We're looking for potential moves to the upside, and it looks like the descending could have actually outplayed its width, but we do not know yet. Maybe the length of the descending is done. It's time for us to move to the upside. We do not know. You cannot confirm that. You will never know when it actually is. The market is actually about to break the descending or the ascending. You don't know how long a correction is going to last. You also do not know how fast an impulse is going to be, but we are able to forecast these moves before they happen, and then when they do happen, we capitalize on them because we forecasted them. We saw their potentials, so we knew exactly what we are going to do when they do happen. So currently we are at a very, very important area because we're touching that trend line there. It might give you a more of a continuation type structure for us to take it to the upside, or more of a reversal type structure. Before you even say anything, we'll take a look at that and see if we can capitalize, right? Okay, so this is what you're looking at. This is the daily chart. Now you're looking at more of a descending type structure. Forget everything that has happened to the left and let's focus inside this descending structure. What is it that we do see? So what I do see here, for me personally, I see this as more of a correction. It's more corrective than it is impulsive, right? So if you had taken this buy from here all the way up there, kudos to you who was able to do that. For me personally, it took me out when it pulled back to the it went up and then took me out in small profits when it pulled back to the downside. Then ever since then, I've been eating a little bit of some sells, currently in a sell. But let me show you exactly what it is that I'm interested in. I'm interested in you identifying this whole move here. For me, looks a lot more corrective. Now I want to show you something that is very, very important, right? It's corrective, but on the overall, what does it form? Low, higher high, higher low, higher high, higher low. So it's more for those who are trading in terms of, or is the trend up or is the trend down? The current trend is to the upside, but we are inside a descending structure. So I know that the potential that the fact that the current trend is to the upside could potentially influence the next direction of the market. So let us then go on to do something that we do. First touch, second touch, third touch. Right, the first touch is here. First, second, third touch. We know we have had 3 touches already. We know there's potential that this here, the lifespan of this whole descending structure could have died out. We are most likely to move to the upside. So let me go ahead and identify my inflection points. We know there's an area of inflection. That's an area of inflection. We have an inflection point around there. There's another inflection point. So those are the 3 most important inflection points as far as now is concerned. If we do manage to break out of this, our target would be all the way there, right? That would be our target area, all the way around that area there. So let us go on and analyze. Let's go to the 4-hour. On the 4-hour, what is it that I see, right? So I'm going to focus only on structure and identifying structure. So I'll identify structure beginning from here, see what has happened. Okay, so we have had this whole long descending structure. The market was in a descending structure, and we know what is it that we look for when the market is descending. We look for potentials for move to the upside. So this became, excuse me for that, I have caught a cold, so if my voice is not clear, I do apologize for that. So this, and then we came back, double top, double bottom, move to the upside. So it was impulse, correction to the downside, impulsive move to the upside. But because there was no real natural progression, look at this, immediately as the market impulses to the upside, what does it do? It gets into a correction. Is this a continuation or a reversal type correction? It's more neutral to me, so I wouldn't have taken this to the upside. You'd have to wait to see whether it breaks to the upside or it breaks to the downside of the correction. What does it do? Breaks to the downside with an impulsive move, another correction here that is not clear, and then a whole move to the upside. But is this is the current move? This is where we are currently at, right? So is this to you looking like it's more impulsive or it is corrective? To me, it looks a lot more corrective than it is impulsive. So if you're looking for buys, fine, you can look for buys, it's not wrong. But what I would be interested in is, let's identify the phase we are in. This is what I believe is the phase we are in. Potentially, I'm looking for this to the downside. This is what makes me believe the market might potentially move to the downside. Now, this is not to say I'm going to impose the move. This also, it brings about a very, very important lesson that I would show you. You see that we have analyzed the dollar index, right? We analyzed the dollar index and we said the dollar index looks a lot more like it could potentially be moving to the downside long term. Yes, and that correlates with what we are seeing on Nasdaq, because we say Nasdaq looks like long term it will be looking for buys. So that of course correlates with the dollar going down, Nasdaq is to go up. That is fine. But look at, currently we are still looking for the dollar index to go down, but Nasdaq is also looking like it could go down. Then the big question becomes, am I now not going to take or capitalize on the Nasdaq sells if the dollar does sell? No, because I do not trade like that. I do not trade solely based out of correlation. Because one thing that I've learned, and it's such an essential thing that I've learned, is you are supposed to learn to trade each and every pair out of its own accord, or out of its own analysis, or its own price structure. If Nasdaq shows you a structure for sales and the dollar index is showing you structure for sales, take the Nasdaq sell. Immediately the market impulses away, go to break even, and then let the market play out. Because long-term trading out of correlation will show you that it's not that, it's not going to help you that much. Of course, having correlation, it kind of increases your edge a little bit, but it's not the most important part of trading. It's not. You can trade without it, believe me. Same as how you can trade without fundamentals. You do not necessarily have to know exactly when the governor of New York is going to say something that is going to affect the is going to say something that is going to affect the dollar or whatever. But you have to be able to read price action, because most of the time price action will show you that something negative or something positive is about to happen before it even happens. So the next thing here, now that we have identified that we are actually already in an ascending type structure, I want you to look previously. What did we do? This whole move here is corrective, is it not? It is pattern separation. So we know this whole move here is corrective. What would have been our expectation at this juncture? Of course, a move back here for the third touch, but understanding, of course, again, that we do not have to come all the way low here. We could potentially form a double bottom. Why is it that we can potentially just form a double bottom? That is the override. The go-to setup would have been the third touch. That would have been the most probable. But because we have been able to forecast the possible, which is the double bottom, then we would still have been able to capitalize on this move to the upside. It gives you the double bottom, go to the upside, gives you a scaling opportunity, continue to the upside. This is ascending, so essentially you would have been taken out at around that area if you are managing properly. So inside the structure, I want us to go ahead and identify structures. So we have this structure there. This whole move here is descending, but you'd have been already in a sell right there from that area there. This is an ascending side of an ascending if you look at it properly. And then we have this whole move to the upside, which is also still corrective. This whole move here is also corrective, but what I do kind of see now is there is potential for us to build an ascending inside of an ascending there. I do see this potential now. You have to be able to forecast. Forecasting sort of, excuse me. Focus is one of the most important skills when it comes to being able to trade. So let me pause for now. Okay, so like I just said, one of the most important skills that you need to have as a trader is the power or the skill to forecast, being able to see potential scenarios before they actually play out, and being able to see the possible, the probable, and all the potential possible outcomes, and having an override, the ability to forecast, see that the most likely setup or the most likely thing to happen is for this to actually go here and you take it to the downside, but be able to see that this can actually also still happen. So when this happens, it does not surprise you. Instead, you have already been able to see, or you have already determined that if this happens, this is how I'm going to take advantage of it. So what I'm currently seeing here is more of an ascending structure. I wouldn't really be looking at this ascending, or rather this trend line, as some sort of an important area, because we could still invalidate this to the upside. And as long as we are, or as long as the market is still on this ascending structure, I'll still be looking for most of the downside. So currently, what is it that interests me? How would I be looking to take this to the downside? Excuse that. So what would I be looking to take, or what would I be looking for from the market. Already, if you are in a sell here, kudos for that. That's a very good entry at the top there, because this was an ascending inside of an ascending. This whole thing there, that's an ascending type structure, and it has an arc formation right there, arc formation. So if you're already in a sell, that's a good setup. But what are we looking for currently? What I would be looking for on Nasdaq is a move to the downside. I wouldn't really be interested in taking Nasdaq to the upside, so I would extend this a little bit, so that you know. Of course, if the market pulls back there again, I'll still be interested in taking this to the downside instead of taking it to the upside, unless it invalidates the whole ascending nature of the market. So what is it that I am seeing? What I would like to see, if we get this, because I understand that the market doesn't have to come all the way back here to give me a potential double top or triple top formation all the way at the top there. So if we get this moving along here for more of an impulse correction, I'll be looking for this to go to the downside still, because it could form just a smaller double top around here for us to still go to the downside. So I'll be interested in taking that to the down. That is actually at this juncture my go-to setup. That is the most probable setup because of what the market is currently looking like it wants to do. But one other thing that the market could potentially or essentially do is it could just ascend all the way back there. So then it gives you an ascending inside of a whole ascending structure. So it could ascend all the way to reach this point, and we still go to the downside. So those are what I just showed you at the first attempt there was to show you the most probable setup. So now I'm going to show you the one of the possible scenarios, right? Possible, we could just impulse, and then you would just take advantage of it after the first impulse, which should still be okay. But one of the things that I want you to have when you're going to take sells on this pair, if that happens, or if the sell comes here as a premature sell and you're able to take that, if this gives you a continuation structure, you must have it at the back of your head that we are still overall in this ascending structure. There is still potential for us to actually impulse, correct again, impulse. Now we have built a descending structure, and the market might just now impulse back to the upside. So your management wise, if you're going to take sells here, you should have it at the back of your head that we are most likely to build a bigger structure. So you should always be identifying what it is that the market is doing. As much as you're interested in taking this all the way to the downside, it doesn't have to just sell all the way to the downside at first attempt. It can come here and then still go back up there to get the sells. So that is what you should have at the back of your head. So it could come here, go back there, and still sell. So that is one other thing that you should have at the back of your head. So another possible scenario, like I said, is for us to actually impulse all the way there. So the market could just actually correct around here, build this, look at that, and then move there, ascend again. And if this would actually be my favorite, this is one of my most favorite, because then it will go to the downside. Then my anticipation would be for this to be actually a longer sell to all the way here before it actually buys. So why would this be my favorite? Because one, we have broken a previous resistance area, a previous inflection point, which of course majority of traders who trade support and resistance based strategies would be looking at as a resistance, anticipating for it to either hold and then they move to the downside, or if it is invalidated and move to the upside. So when they take buys, because it has now been invalidated, but because it is being validated with an ascending structure, I would still be looking for sells, and I would take care of myself in that manner. Put stop loss just above structure, and then this would be my first target. But I do not put, like I repeat, I do not put take profit areas, but instead I let the market play out. And when the market shows me potential signs of reversal, that is when I would actually be looking to close my trades. So this is what I'll be looking for, essentially a young 1 to 14%. That's a good percentage in one trade or in one pair. So this is what I'll be looking for. This would actually be my favorite. This is my favorite thing to play out. If this does play out, that would be a very good setup, but the market does not work in that manner. It does not work with favorites. So it's a game of probabilities, and the most probable thing would be for us to give you a continuation structure here, for the market to give us a continuation structure here. If it does not, then we wait for entry at the top there, at the top of risk risk there. That would be our my go-to setup. So this is my analysis on Nas100. I'm looking for sells this week on Nasdaq, although I am also still looking for sells on the dollar index. So because DXY looks like sells, you're also looking for sells here on Nasdaq. It's not correlating. The correlation is not there, but I do not really base much of my trading on correlation. So correlation or not, I will trade structure for what it is. Plus, this could just essentially mean the market is going to give us a continuation, a move to the upside while Nasdaq collapses. And then once Nasdaq starts to build and move to the upside, this actually collapses. So we'll be able to capitalize either way. So that is my analysis on Nas100. That is basically how I run through my analysis. That is how quick I actually analyze. But usually what I would like to prefer is analyze on Friday with a different point of view. Saturday you come back again. Saturday right at market close, you start analyzing 30 minutes analysis, then you go to sleep. Next following day, Saturday, go for a 45-minute analysis, and then Sunday you analyze again, preparing for the week ahead. So then you know that you have had 3 different mind frames with Friday, Saturday, Sunday to analyze the market and see different perspectives or different viewpoints of how you would have seen something, instead of just seeing it once and saying it's definitely going to sell. So this is what I'm looking for. We know there's potential for us to move to the upside a little bit. We don't necessarily have to just collapse from this point. So this is what I'm seeing on Nas100 for the day. Let me check the length of the video, and then maybe I might continue on to analyze the next pair. So this video has been 42 minutes. Is this 42 minutes? I think that's 42 minutes. That's too long. It's too long. It's too long. I do not want it to be this long. So I'm going to just analyze Nas100 for today. That's Nas100 analysis. So I'll see you on the next video, where I'm going to be analyzing US30, German 30, and Bitcoin, and see the progress of that. Without any further ado,